Good evening and welcome to the turtlefollower.com, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the stock market for Saturday, January 9th, 2016. Excuse me. I had a tough week, tough start to the year. We really have accelerated the sell-off that we've seen, and now we're coming into a key area that we've had on our charts for some time now, right around this 1880 area, all the way to 1860. And you can see the 1880 on the weekly and the 1860 on the daily. Again, we're looking at the S&P futures. As far as I'm concerned, I don't see any reason we don't continue lower. I don't see any reason we don't continue to test those levels. Right now, it looks like maybe a double top formation. Maybe this year is going to be a year where we just trend downward. Unknown at this point. But for us, for right now, we're still, from a portfolio perspective, we're still in some of our core account positions because they are outperforming and at least holding up at this point. And we've added a lot of short-term short trades for the trading account. So we're trying to catch a little bit of this pullback because, again, we don't know how far this goes. Does this come all the way down to 1860, bounce, and then eventually break down? We don't know. All right, so you just got to kind of follow the price action. Right now, to me, price action saying we're getting more to the downside. All right, we're more likely to go to the downside than to the upside. And we've talked about this in the past. We talked about this back in August when we had this big 4-day push to the lows. All right. There's a lot of overhead resistance here, so very difficult to break us out of this range. So from the S&P perspective, I think probably head lower this coming week, and we're positioned for that. The NQs, all right, similar situation. You can see we broke this 4,440 level. All right, coming down now. Next level I would be looking at on the NASDAQ futures would be something around 4,100 or so. All right, that would be where I would at least expect to see some type of bounce. But you can see now we are trading back below the 200-day moving average in the NASDAQ. All right, we did that back in August, got back above it, now back below it. So it's just a very choppy action. And as I said, I think at this point, price action tells me probably likely to see lower prices ahead. All right. If we look at the Dow, they're all the same type of setup. Here, the Dow, we talked about this as well. We're hitting this downtrend line. All right. Dow looking for that 16,000 levels, looking for a touch there. But you can see all the levels that have been broken already. All right. This week was a tough week in all the markets. All right. I think the S&P was down about 6%. I'm not sure exactly what everything else was down, but you can see the Dow went from 17,000 all the way to 16,200. So just about an 800-point move in the Dow in a week, and every single day is lower. And that started actually before the new year. Okay, we had 2 days, that Wednesday and Thursday, where we really started to see that sell-off. So again, trend line broken, levels are broken. All right, next area I would be looking for would be something around, as I said, 16,000, and we still have some room to go. Not saying that we can't bounce, all right, but just understand that what's happening here. Well, anybody that's stuck long wants a little bit of a pop to, lighten up the positions. All right, they're seeing the same things we're seeing, and what we're seeing is that a lot of these markets are breaking some key support areas. All right, if they're stuck long, they're looking to potentially use those bounces to liquidate positions. Look at what happened on Friday. All right, Friday, I think at one point over in the overnight hours, the market was up, at least the S&P was up like 25 points at one point. And then ultimately, in the last hour or so of trading, it crashed down and we closed down 20 points. So it was like almost a 50-point move from overnight on Thursday to the final close on Friday. And again, it's just it's a tough market to see. It's a tough market to go off of. All right, and again, you have to understand who's on the other side of these trades. And again, if they're long, they're looking to sell into that strength of a small bounce or whatever it is, and that's what keeps the pressure to the downside. All right, so I wouldn't be sticking my neck out here trying to find a bottom. All right, if you have a stock that maybe is going higher, then go ahead and, if you want to try and take a long shot, but just keep your stops very tight. Maybe even position sizes small. I still think, as I said, shorter trades here or short trades here are really the way to go. And you can see finally the Russell has just broken everything. So what we had discussed as being an extremely key level around this 1080 or 1100 is now been broken, and this to me looks like a prime setup for a short trade. All right, so if you're long the IWM or whatever, at this point, from what I'm seeing on the chart, you're wrong. Okay, we're breaking to lows. We're trading below the 200-day moving average. We now have a consolidation lower. So again, where we were previously, stepping higher, all right, consolidation. So we're moving higher. Now we have it moving lower, breaking down, we'll consolidate, break down. All right, so that's the pattern that we really, you just don't want to see. And here you can see again with the Russell, just this huge move to the downside this past week, and even really since a little bit before New Year's. All right, so we can actually remove this drawing, and now you can just see it, all these levels that have been broken. So looking at sectors, you can see here in the last month, the S&P was down 8%. The only sector that's been positive over that same time period is the XLU, and that really is just because it's going sideways. All right, the utilities. The XLP, which are the staples, all right, those are breaking down as well, down 1.25%, coming into a key trend line area, looking like it's breaking down there as well. The XLV, all right, again, where we thought maybe we would start to move higher, now looks like it's rolling over, has broken the lower end of that range, and now we can actually redraw some lines, and now essentially we're trending lower. All right, so not a good situation for the markets. As far as my recaps this weekend, they're going to be very short and sweet because there's really not a lot to do. We have no new additions to the weekly watch list. We have nothing that we have a couple trades that we're going to go over for the trading account. Core account is really at a wait and see mode. We do have one trade that we're going to put out to the long side. That again, if it's up to you if you feel you want to take it or not. But as I said, at this point, moving forward, I see the likelihood of lower prices as extremely high. So just understand that we're not in the early stages of this. I mean, from a weekly chart perspective, this could be the start of a year or so of lower prices. We don't know what happens, but for right now, odds are that shorter trades are going to be the better way to proceed. And as I said, we had 7 new short trades the other night in the trading account that we entered on Monday. All of them are nicely profitable. And again, we'll have another one tonight. So that's it for the weekend update as far as the stock market outlook. For members, head on over to their videos for each account. If you're not a member yet and you want to try it out, head on over to theturtlefollower.com, go to the memberships page, and you could try out the premium membership and follow either of the accounts, whatever you feel suits your needs, for 30 days. No questions asked. That's a free trial. And then $70 a month after that. All right. Any questions, please let me know. And have a great rest of the weekend. Take care.